PSUs, where there is a slight indication that there could be more carry forward momentum. But then as of now, I think just looking at the market reaction overall, it could be termed as more of a flattish day for the indices.
All right, so more of a flattish trade for the indexes seem to be consolidating, yes, of course, but India wakes, that is also down. Almost a 1.3% decline is what we are getting to see. But Sudeep, hi, good afternoon. And indeed, a lot of sector churning that is still underway just last week and this week as well. We have seen a bit of a resurgence in the IT pack. Yesterday, metal and defense was also doing good. But help us understand what is your view on the sector churning that is underway, because today some of these beaten down PSUs are making a comeback. Anything that is looking interesting to you?
Well, good afternoon to you and all the viewers. I think what's happening is market is lacking a very clear trigger at this point in time. That's the reason why we are seeing a movement which is range bound, and there is a definite upward bias in the market. That's why we are seeing market inching upwards, but there is no clear trend visible. Now, of course, based on news flow, based on what is happening around us, things are moving up or down. Of course, the IT got a kind of a leg up when the buybacks was announced by Infosys. Of course, we'll see the specifics once the board meeting gets over today. But the fact is, there is a buyback which is going to happen. Very clearly shows that the companies are looking at rewarding the shareholders. There are expectations being built around buyback, similar buyback being announced by TCS and some of the IT majors. This is creating the excitement in the IT pack. Metals and defense, of course, again, very specific. Some of the order wins are propelling the defense companies forward. Metals, I strongly believe that I think overall, the structure for the metal industry does look positive. It's a structural positive, is going to continue for some more time. Leave aside the regular ups and downs. Metal is in for positive time for the foreseeable future. Having said that, I think I will still focus on large cap stocks and in sectors which are not too dependent on global headwinds and global trade issues. So look at cement, look at, let's say sectors like infrastructure and construction, where there is a lot of spending is happening by government and even private sector. So these are the sectors which should be definitely looked at. FMCG is on the path to recovery. There are views which are, varying depending on when the recovery will come, but definitely they are on path to recovery.
Right. Sudeep, hi, this is Snehi also joining in, and good afternoon. I just want to understand a little bit more about your view when you say the markets are missing a clear trigger. Because, when we had the GST announcement, we did not see all that much happening in the market. And also when we had comments coming in a few days ago from Trump and PM Modi both saying that they're going to be re-looking at negotiations on the tariff front, ideally that should have got the market excited, but we did not see anything like that. Do you believe after the 22nd of September, when GST comes into play and when we have more clarity on the tariff front, perhaps then the market could see some upside?
Well, Snehi, to a great extent, the GST relief or GST bonanza has already been factored in by the markets. The stocks and the sectors which had to move up has already moved up. Now people and the market will wait for actual performance to get demonstrated before there's a further leg up. So I don't think there will be any major movement upwards on 22nd September onwards. Of course, at this stage, pretty much all the auto companies as well as consumer durable companies are witnessing a bit of a slowdown in sales. That's pretty much because of the fact that people are waiting for the new GST rates to kick in from 22nd before going ahead and purchasing. In any case, this is that Shraddh period where the sales slow down, and that's pretty much what is happening. 22nd, the new festive season starts and the purchases will start. So things will pick up, but I don't think that will get reflected in a major way in the share prices because I think it's already factored in. As far as the Trump and Modi announcements are concerned or the tweets are concerned, I think, for lack of better word, we have seen this movie many times. If we start getting excited with the tweets of Mr. Trump, I think, we will have upheavals every day. So I think people have started getting used to the fact that we are in for this kind of tariff, 50% tariff, which is on about roughly 50% of Indian exports to US, and that's going to stay for the foreseeable future. Very clearly, India cannot cross the red line which they have drawn, particularly on agriculture, dairy, and things like that. And without that, getting a favorable deal from US is unlikely. India is not going to kind of concede on buying Russian oil. They will not stop that. So none of the points which US have raised as their supposedly their concern areas will not be addressed. That's pretty much well known. So how the compromise will be reached, where the compromise will be reached is a question mark. It should happen, it would happen, but it's not going to happen in a hurry and not surely based on some tweets by somebody one side or the other. It requires long negotiations, which is what Mr. Piyush Goyal is indicating, that he is looking at sometime in November, December, by when he thinks something reasonable can be struck.
Right. Well, that's how our days end and that's how our days begin as well with Trump tweets. I can assure you that, Sudeep. But yeah, progress is being made on the US-India deal, says Commerce Minister during a press briefing in Patna. Piyush Goyal said that PM Modi and President Trump instructed the two sides that we should have a good agreement by November. Let's listen in.
फरवरी 2025 में माननीय प्रधानमंत्री नरेंद्र मोदी जी और राष्ट्रपति ट्रंप जी ने मिलकर हमें निर्देश दिया था कि दोनों पक्ष के मंत्री फॉल 2025 यानी नवंबर 2025 तक एक अच्छा करार करें। उस करार का पहला अंश, फर्स्ट ट्रैंच, नवंबर 2025 तक फाइनल करें और लगभग मार्च से इस विषय पर बड़ी गंभीरता से बड़े अच्छे वातावरण में बातचीत चल रही है, प्रगति हो रही है और प्रगति से दोनों देश संतुष्ट हैं।
Okay, that's the word coming in from the Commerce Minister that perhaps some negotiation could be in sight by the month of November. But just looking at the market technicals today, and Kunal, it clearly seems like, unfortunate as it may be, IT didn't lend support beyond 2 days. Had it been for IT still contributing, perhaps we could have had better levels, right?
We could have had better levels, but Aisha, I think it's a good sign that IT stocks are consolidating. OFSS today opened with a gap up of another, I think 5-6% or more. Persistent also had seen a follow through. So, when you have such kind of a steep gap up after 10% or 9% yesterday, it's bound to be that these stocks would consolidate. And I think that would be a healthy sign. I'm also seeing that, there's no major retracement or selling into these IT names. So, when you look at Infosys, TCS or other larger cap names like HCL Tech, Techem, etc., it's not as if that these stocks are retracing their last, 2 days, 3 days of price gains by a huge margin. Yes, these stocks, they have softened up, a little bit more from the intraday highs, but then I think these stocks are just about going through a time-wise consolidation. I believe that would be a very good opportunity. So something very similar which happened to the auto index over the last 2 or 3 days, where you've seen retracements for many of these auto stocks because they were overbought on their daily, weekly time frame. I think a very similar kind of a chart is what we are expecting could turn out for the IT pack. My sense is that this dip should be bought into for especially the larger cap IT names, TCS, Infi, as well as Wipro, HCL Tech.
All right, so that's the take coming in on the IT space. But one of the key stocks to watch out for will be Infosys, as there is a board meet today to consider the proposal for a buyback. And if approved, this will be the 5th buyback from the company since listing. My colleague Ashesha joins in with more details on this one. Ashesha.
Well, yes, all eyes are on this IT major Infosys, which will be conducting its board of directors meeting later today to consider buyback. Now, if we look at the history, in 2017, they had announced a total buyback to the tune of 13,000 crores. In 2019, 21 and 23, the buyback size was anywhere between 8,000 crores to 9,500 crores. Now, as far as the premium is concerned, the buyback price was at a 30% premium in 23 and anywhere in the range of 18 to 25% in the last 3 years. So buyback premium is expected to be in the range of 18 to 30%. Now, if we look at the company's policy for paying out to the shareholders, the return stands at about 85% of its free cash flow on an average period over the last 5 years. And as per analysts, about 70% is given via dividend and the balance 30% is given via buyback. Now, as far as the total size is concerned, now remember, total paid up capital and reserves and surplus stands at about 95,000 odd crores. And the management and the company has a history of giving 12% of its total reserves as buyback. So, if we consider 12% of this 95,000 crore, it translates to about 11 to 11,500 crores. That's the expected total buyback size. As far as premium is concerned, as I mentioned, it is expected to be anywhere between 18 to 30%. And if we consider that, then the buyback price is expected to be in the range of 1840 to 1900 rupees per share. And considering the total buyback size of about 11,500 crores, about 6 crore equity shares are expected to be bought back by the company. So that's the rough math and the expectation with respect to Infosys buyback announcement, which is expected to come in later today.
Okay, Ashisha, thanks for taking us through that. Well, yes, all eyes are going to be on the stock of Infosys, currently taking a little bit of a cut in today's trade, but that buyback announcement from the management is going to be very closely watched out for. But we also interacted with Sandeep Tandon, the CIO at Quant Mutual Fund, and he is betting big on the Indian IT space. Let's go across and understand why and what's the rationale behind that.
We have built exposure in the large cap IT because they are relatively more cheap. And most important thing in this challenging environment, I always say liquidity is more important than the returns. So mid cap IT maybe all looks very nice, but they are relatively illiquid as compared to the large cap name. And given the background, I think purely from a liquidity perspective, valuation perspective, and safety perspective, I think Indian IT large cap looks better than the mid cap space in general, but obviously there will be stock specific opportunity in the mid and small also.
Okay, let me welcome on board Arpit Beriwal as well and find out what he's been reading on the charts. Arpit, what trends are you picking up? Where is it that you see sectoral leadership?
Very good afternoon to all. So overall, if you look at the broader indices, if you've seen a very stock-specific action is seen. So first, we talk about Nifty. So Nifty is slowly, steadily is moving higher from 24,600. It has slowly, gradually moved towards 25,000 plus levels. So now, looking at the overall setup-wise, I think banking and IT, these are the two sectors to watch out for. In particularly IT, if we see heavyweights has seen good momentum in last couple of days. Today, it's more of a consolidation. So our sense is that more stock-specific action is likely to continue, but we can look out for selective IT stocks. Along with that, one sector that is looking very strong is PSU banks. So yesterday, the main rally was led by PSU banks. So I think from the banking space, PSU banks look quite interesting, and Indian Bank and as well looks quite promising from here on also. We can see good momentum in this space going forward.
Is actually looking good to Arpit, and I remember Kunal that also flagged this off in the morning, and Kunal, this stock is at its all-time high right now, 695 thereabouts. So that's on Indian Bank. But Kunal, while we're talking about stocks that are at all-time high, you also have Fortis and GMDC that have inched their respective all-time highs. Does the chart setup still merit a little bit of a further run-up from here, or do you believe now is when these stocks take a little bit of a breather?
So GMDC, I think, should take a breather over here after today's sharp intraday correction, more than 10% or 15%. I think 560.70 was the high for GMDC, and the stock made a low which was around sub 500 mark mid-session somewhere. So that just puts the brake for the stock price, at least in terms of the near-term momentum. It doesn't change the trajectory of the trend on the upside. But then what happens is when stock runs, when stocks run into extreme overbought territories, there are bound to be these knee-jerk price actions which causes the stocks to consolidate and start to get into a little bit more volatile phase than what has been earlier. So I think in that sense, I would probably expect GMDC to just about be a little bit more volatile, try and go into a further correction mode over the next couple of days maybe. I think Fortis could be an interesting stock. In fact, the entire hospital space has been looking very attractive. Whether you look at Apollo Hospital, which has been one of the more stronger stocks, even the recent past, the stock breaking past above the 7750, 7800 barrier. And then Fortis also, I think, on the short-term charts looking very attractive, being more consistent on the upside. So I think this could be one space where one could look at a buy, and in case if there are any kind of minor dips, because these stocks are not very volatile. So you may not see those 10% kind of a gyrations into these names. But in case if there is a 2 to 5% dip into the stock price, that should be a good level for traders as well as long-term investors to average.
All right, so that's the take coming in on Fortis Healthcare. But other than that, one of the other counters that is in focus today is actually Aurobindo Pharma, because just in the morning we did flag off that yes, the company could be in focus on the back of Zentiva reports, wherein some reports are suggesting that there's another company, GTCR, that is nearing a deal to buy the generic drug maker Zentiva, because just in the month of August there were some reports that Aurobindo Pharma was actually looking to acquire this company at higher valuation of close to $5.5 billion. It did had some investor concern back then, but if you see Aurobindo Pharma specifically today, that stock is on the roll. But Arpit, just wanted to have your take, though this is one of the news flows that we have got seen to be taken a bit positively by the markets. But what are the charts telling you? Because the stock has been underperforming for quite some time now.
The entire pharma pack, if you look at the chart structure of Oro Pharma, so it has been a huge underperformer. But the good part is that if you see on the monthly scale, it has formed a strong base near 1,000 levels. So if you look at the last structure of almost last 7 to 8 months, multiple supports are intact near 1050 levels. So look at the overall setup wise, definitely the base formation has been done, but the real momentum will start above 1151 closing. So the sense is that level wise, 1150 would be a crucial level to watch out for. Closing above that definitely will head the stock towards 1250, 1300 levels. So from a positional perspective, risk reward is quite favorable at current junction with the stop loss of around 1020 for an upside move towards 1200, 1300 levels. From an immediate basis, 1150 will be the level to watch out for. Closing above that will definitely trigger the momentum towards 1250, 1300 in short term.
Okay, so those are the levels to watch out for on Aurobindo Pharma on a tear today and up about 5.5% as we speak. But shifting focus back to autos and on to the event of the day, my colleague Nivedna Prabhu caught up with Maruti Suzuki's Hisashi Takeuchi on the sidelines of the SIAM annual convention, where he spoke about their growth roadmap and the launch pipeline. Let's go across and listen into a slice of that chat.
This is a very, very big gift from the government to everybody. And also, this is a very good support for, especially for the small cars. The small car GST was 29%, now becoming 18%. So 11% tax cut. That will give us, when we calculate the retail price, it will give us about 8.5% price reduction of the retail price. So that itself is positioning the small entry cars much, much lower position. So I think entry cars will become very affordable for many, many people. So I think this is a great support from the government.
It is a great policy push, and the timing of it also perhaps couldn't have been better given the festive season around the corner. So what's the outlook like?
I think we already see some good trend of increase of booking, and especially like small cars. For the first part of this year, small car is declining, but now from that level, I think we expect more than like a 10% increase will start after this GST cut.
And in terms of outlook for the industry as a whole, what are we looking at?
Yes, the small car is getting this benefit, but across all the segment, it gives us decent tax cut. So every segment will enjoy this GST reform, and overall, I think next year, financial year, the total industry will start showing 7 or 8% increase from H2 of this year and next financial year as well.
Something interesting that has, of course, happened for Maruti is with the launch that we saw in the Gujarat facility, with the Prime Minister being there, the export aspects that we're looking at it. What I want to understand is how is Maruti looking to get that balance between exports and the domestic demand with the revised GST, of course, likely to perhaps influence consumer demand as well?
Yeah, of course, the domestic market is the biggest and the most important market for us. But as you said, export demand is growing. The year before, 2 years back, our export was 2.8 lakh. Last year was 3.3, and this year we see more than 4 lakh. So the growth rate is actually bigger. than the one for the domestic market.
Okay, that's the word coming in from the Maruti MD and CEO. Of course, Motown is all geared up and announced so as well to dish out all those discounts come September 22nd, wherein they're going to pass on the GST cuts on to the consumers. But Sudeep, what I wanted to talk about is all the new paper which is hitting the market. I know we've often spoken about it, but I was just looking at urban companies' subscription figures, that along with Shringar and a few others. Anything from the primary markets that you're looking at?
Well, some of these new platform companies are definitely interesting from a long-term perspective, which is the view we have been maintaining. And I maintain my view on that. And I think, you mentioned Urban Company. It's definitely a platform. They are entering multiple new, smaller cities and towns. And the management has very clearly clarified that that doesn't put pressure on the margins because they are maintaining the rates even when they are entering the smaller centers. And that's very encouraging because one would assume that they will have to reduce the prices when they enter smaller locations, but that's not the case apparently. And I think the growth potential is humongous here for some platform like Urban Company. So from a long-term perspective, I'm definitely positive. The valuation at which they have come is not cheap, and investors, I would say that if somebody is getting allotment or somebody is applying, they should plan to remain invested for long term. If you look at the history, whether you look at a Zomato or a Swiggy or even the PB FinTech, I think all of them after listing we have seen a lot of volatility. But once they settle down, the business becomes kind of profitable. The valuation keeps multiplying. So I think that should be the trick from an investor's point of view. Of course, traders will do well, buying and selling into this volatility and make money.
Okay, Sudeep, appreciate that thought coming in, and thanks so much for your time today. On that note, we'll let you go.